there's something called a disability tax credit. And this is something that the government gives, and it's a refundable tax credit. Remember, we were talking about a non-refundable tax credit? So if you have no taxes to pay this year and you apply for the medical expense tax credit, and you have money that should be coming back to you if you owe no taxes, if you don't get to reduce your taxes. What the disability tax credit does, it allows you to get taxes back going back about 10 to 15 years. So if you have your child properly documented that they have a learning disability of some kind, you'll be eligible to receive the disability tax credit. Can you move to the next slide? This has been around since 1944, so it's not something new, but it's something that most people don't know about. And the government, when it comes to properly documented individuals, taxpayers, who apply for the disability tax credit, they're very responsive. They will make sure you receive money back from them, and the amount can be quite substantial. Al, can you just move to the next slide, please? So as I mentioned, the criteria to be eligible for this meets the same criteria practically to get the medical expense tax credit or the health and welfare trust. Now, I work with a lawyer who specializes in getting a client eligible for this. And to do it, we have to make sure that you follow a certain process, and he will make sure all the documentation is done. And he receives a percent of what the recovery is. But again, this is money that you've paid over the years, maybe the last 10 to 15 years, that you'll be eligible to receive back. And basically the criteria are very simple. You have a severe and prolonged mental or physical impairment which makes you markedly restricted in basic activities of daily living. And Revenue Canada has special bulletins that state that a learning disability meets this criteria. And basic activities of daily living are seeing, walking, speaking, perceiving, thinking, and remembering and hearing. That falls under learning disabilities. How can we move to the next slide, please? Now, this can be transferred to individuals who've been paying for those children, so you're eligible for this. Can you please move to the next slide, Al? Now, to be able to, Al, can we just move to the next slide? So, getting back to the number I was sharing with you, if you spend the time to document your child as having a learning disability, and you are either eligible you'll be eligible at first for the medical expense tax credit, or if you have your corporation or you own a business, create a health and welfare trust, you would be able to drastically reduce the cost. If you create a health and welfare trust, instead of being $80,000, the cost of Robert Land of your growth would be approximately $48,000. By doing that and getting your child diagnosed and meeting the criteria for either the medical expense tax credit or the health and welfare trust, you will be eligible anywhere from $10,000 to $30,000 of refundable tax. It means the government will write you a check for $10,000 to $30,000, depending on how old your child is. If your child is over 18, the number is going to be less. Now, I want to also share with you that if you get your child properly documented with this, for the disability tax credit, this continues on indefinitely as long as your child is not, let's say, going through school. So for after they finish Robert Land and they go to university, they're eligible for this. Basically, a person could be receiving this for the rest of their lives. So I just want to share that to you and point that out to you. It's something that a lot of people don't take advantage of. They don't know it's out there, and it's something that if I really enjoy seeing clients who go through Robert Land receive this benefit, because whatever your situation is, whether you're able to do a health and welfare trust or not, this is still something you're able to do. The same thing with the medical expense tax credit. Al, can we move to the next slide? Registered Disability Savings Plan. I'm going to go through this very simply. The government in 2008 came up with a Registered Disability Savings Plan. This is very similar to the RESP that many of you probably have right now. What this is when your child turns 18, if they put $1,500 or they're younger, they put $1,500 into $1,500 is put into the plan, and the person has been diagnosed as having a disability, such as a learning disability, the government will match it and put $4,500 in. So right now, if you go through this entire process, this is what the government will give. The government right now, I think the number is like about $34,000 you can get back of money from the government or receive money from the government. And this is something that you can't get unless your child has been properly documented. And again, much of what we've talked about so far is the medical expense tax credit, the health and welfare trust, the disability tax credit, that allows you to get the Registered Disability Savings Plan, which every year going forward, if $1,500 put into the plan, the government will give $4,500. I don't keep up with what the RESP is right now, but I know it's a lot less. Can we move to the next slide, Al? Now, I'm just going to go briefly through this. The money goes into the plan, and it can be pulled out at a later time. And the person's eligible to receive up to, I think it's about $70,000 worth of government grant. And again, it can be taken out if the child's in a lower tax bracket later on. But again, it's free money that's out there that you're eligible for by being properly documented. Can you move to the next slide? I'm going to have you just move through this one as well. As I mentioned, it was $70,000. And one more, Al? Now, if this is a big one, this is what I would call the perfect storm, and I'm dealing with a situation right now where the child is turning 18 years old. So I just want to recap what we were able to do for this parent, and I've been only involved in this 3 times. We were able to establish a health and welfare trust for the parents, for the child going to Robert Land. We were able to put the proper documentation in place where the parent was able to get about $30,000 worth of refundable tax credits. They were able to establish a registered disability savings plan for their child, and their child turned 18 years old in the year that they were at Robert Land. And because the federal government, for tax purposes, recognized the child as having a learning disability, the individual, the child, was eligible for Ontario Disability Support Payment. And this is money that the government will give for your child when they turn 18 years old. Al, can you switch the next slide? Perfect. That's perfect. Now, go back one, please. Excellent. So what that means is when your child turns 18 years old, they're eligible for $1,060 a month. So after, and this will continue as long as they're not earning money. So if they're going to university or college afterwards, they'll receive this money as long as they're not making money. The government will continue to pay this. So even though we're talking about this year, I have situations where students are turning 18 years old and their parents are eligible for this. So they're getting they're writing down to the Health and Welfare Trust from Robert Land. If it was it's going to be $80,000. They're able to bring it down to about $48,000. They're also able to get an additional $30,000 worth of refundable tax credits. So right there, the cost of school has dropped down to $18,000. They've been able to get $4,500 worth of grants from the RDSP. So that's dropping from $18,000 down to $13,500. And then if the child's 18 and get the ODSP, we're talking Robert Land, the cost of Robert Land is going to be $1,000 because the ODSP kicks in. And so we've just brought that nut down. And it's a huge nut. Now, Al, can you just switch over to the next one? I just want to go quickly to the Registered Employment Savings Plan. Now, if your child receives all those benefits when they go to university, like the ODSP and all that, doesn't impact you using your RESP. So in essence, even though Robert Land might be a very expensive net for you to start off with, if you do these different solutions that are out there for each and every one of you, Robert Land, the cost could be as low as $1,000 in the first year. And going forward, as your child continues their education, you'll actually recoup this money from the government because your child you'll continue to get disability tax credits. You'll continue to get the RDSP contribution of $4,500 for that child, plus they'll continue to get ODSP until they're finished school and they're able to get a job and be productive human beings. And again, when I went to Robert Land, I qualified for all of this, and I'm proud to say that I'm dyslexic, but basically because of Robert Land and because of the structure and the discipline, I credit much of my success to Robert Land. But again, it was a heavy cost for my parents. And each and every one of you, I feel for you because I know the sacrifices that my parents made, but it was important. However, there are things out there that will assist you to pay for Robert Land.